Hi everybody, this is Kim. Thank you so much for clicking on this video. As you can tell by the title, I'm going to be talking about Doordash. This is a financial focus. I know it sounds very dry and uninteresting, but it's quite eye-opening, so I think you should watch, especially if you're a Doordash driver. This explains a lot. At least it did to me. I hope you enjoy it. Please give the video a thumbs up if you find it interesting or if you learned something new. And don't forget to subscribe if you haven't done so already. I would really appreciate that. Okay. And forgive my fuzzy hair. I was out in the rain today. It rained. So exciting. Southern California. Imagine that. Anyways, okay. So, like I said, this information is financial. I'm going to go over the last 4 quarters of DoorDash's financial statement information. I'm not going to assume you know what all the different things are that are listed on the financials. So I am going to do a quick definition of terms. I decided to do this because I didn't know what everything was, and since I was looking it up, I figured maybe somebody else might not know what it is. So you can skip this part if you already know all this, but maybe you'll learn something. I did. I really want you to be able to understand the information presented, and that's why I wanted to add these definitions. They came from various sources on the internet. I tried to find the most simple, straightforward definitions I could. I got them from Motley Fool, Investopedia, and Robinhood. I'm not an expert on any of this. I'm just sharing the information that I found online and I found interesting. Do not use any of this information as a guide to any investment whatsoever. There we go. That's the disclaimer. Now let's move forward. Okay, the first definition is revenue. And now this little box is covering, so I'm going to read from my notes just because I want to make sure that I'm going to see if I can move this little picture-in-picture box here. I've never used this software before. I apologize. I took screenshots of what these definitions were so I can read from there. I know I hate reading when people read when they're, I'm going to put it up here so it doesn't look so ridiculous. Okay, revenue is the total amount of income generated by the sale of goods and services related to the primary operation of the business. Revenue, also known as gross sales, is often referred to as the top line because it sits at the top of the income statement. That's pretty straightforward, right? Okay, net income. Net income is calculated as revenues minus expenses, interest, and taxes. Basically, oh my God, how am I going to do this? How much profit the company makes after paying all its expenses. Earnings per share are calculated using the net income. If you are investing, you should review these numbers calculated to calculate net income because expenses can be hidden in accounting methods or revenues can be inflated. So is this number real? Not always. I have a feeling sometimes it's misleading. Diluted EPS. So this one I did not know what it was, and I found it quite interesting actually. Diluted earnings per share calculates a company's earning per share if all convertible securities were converted. Diluted securities are not common stock, but instead they are securities that can be converted to common stock. So in English, I think that means many companies have additional shares of stock in reserve in the form of equity, compensation, employee stock option security, and EPS includes those in its view of potential per share profitability. So that's what diluted EPS is. Now, net profit margin. A profit margin is one way to calculate what a company really makes at the end of the day. Net profit margin is all the money a company takes in and subtract, oops, oh, I'm sorry. I lost my place. Here we go. What a company takes in, okay, subtract total expenses, then divide that number by the total revenue. This results in a percentage that shows how profitable the company was over a period of time. Okay, so how's that for an answer? Okay, I'm sitting on the floor. This is probably not the best. I'm sorry. Like I said, I haven't used this before. It's kind of annoying. I don't know how to get rid of this. I'll figure it out. Okay, operating income is The profit left after paying for all expenses related to a company's core operations. It's the company's profit after deducting operating expenses such as rent, insurance, equipment, wages, depreciation, utilities, marketing, and office supplies, and many more. Operating expenses include many things that are naturally recurring costs to running a business. Net change in cash. Now this I'm still not clear if this should be a high number or a low number. But net change in cash is basically how much cash or cash equivalents goes into or out of a business during any time period. So I'm not sure if it's good to have a high net change or a low net change. If you know, please put that in the comments below. I would love to know what number you're looking for that. Cash on hand is the cash balance that's accessible. This refers to all cash regardless of its location. Investments that can be turned into cash within 90 days or less are usually included in this calculation. Liquid assets is another way to determine cash on hand, and that's another thing that it's usually called. Okay, then cost of revenue. Cost of revenue refers to the total cost of manufacturing and delivering a product or service to consumers. It represents the direct costs associated with the goods and services that a company provides. It's calculated as the average sales price times the number of units sold. Revenue is also known as sales on an income statement. So revenue and sales are kind of interchangeable words, I believe. Okay, so now that that is clear as mud, let's move forward with the information. So these are the financials that I found on for Doordash for the last 4 quarters. Does not include end of September, so I'm not sure why not. It's October now. We should have September in there, but that's not what I found. Anyways, I think we should look year-over-year comparisons to get a clear picture. First, we're going to look at each quarter, and then I'll show a summary comparing quarter to quarter, and it's very interesting. At least to me it was. I noticed a trend. So I wanted to ask you to please like and subscribe again. I'm sorry, I already asked you, but I'm asking again. Okay, so this is the information that is on Google for Doordash for the quarter ending September 21 as compared to 2022. So here's the current year versus last year. So revenue went up 45%, net income went down 135%, diluted EPS, I guess, is even. I'm not really sure. Like, I don't know. I'm not sure. I guess that means, maybe it means it wasn't recorded. I don't really know what that dash means. Net profit margin went down 62%. Operating income went down 230%. Net change in cash went down 388%. So I'm not, like I said, I'm not sure if this should be a high number or a low number. I'm not sure. Since this is red, I'm thinking this is bad, but I'm not really sure. Cash on hand, they don't have information listed for that. And cost of revenue went up 53%. Sorry, I couldn't see that. Okay, so here's December 2021 versus 2022. This is 2022. This is 2021. So they had a better quarter, right? But this includes all the holidays, so that explains, I think, a lot of this growth here. 34% increase in revenue, 50% increase in net income, 83% diluted EPS, 62% increase in net profit margin, 50% increase in operating income, net change in cash down 111%, and cost of revenue up 34%. So this is green. So I'm not sure why a cost of revenue going up would be a good thing. I don't know. Or if this just means up and down, maybe not good and bad. Hey, if you're a stock expert and you know how to read all this, correct me in the comments below, or let me know how I should be reading this, because maybe I'm not reading it correctly. But here we go. So March 2021 versus here's 2022. Revenue went up 35, down 52 for net income. Diluted EPS went down 41%. Net profit margin down 12%. Operating income down 75%. Net change in cash up 22, almost 23%. Cost of revenue up 35%. Okay, so then now we've got June 2021 versus 22. So in 2022, the revenue went up 30%. Net income went down 150, almost 158%. Diluted EPS down 140%. Net profit margin down 98%. Operating income down 176%. Net change in cash went up 100, and I can't read it because I'm blocking it with my little thing here. And the cost of revenue went up. Okay, that was interesting info, right? But looking at it that way, you can't really see the trend. And I'm more interested in the trend, right? And how are things looking? This data cannot be the whole picture, but it should show us some sort of determination in the health of the company, right? I mean, if it's real information, we should be able to determine that. What do you think? Put down in the comments below. I'd love to know what you have to say about any of this. Now, the next graphic should show you the trend. I input the data into Excel so I can more easily view data trends and look at that, and I think that'll be more eye-opening and more interesting for you. So this is the Excel sheet that I created. Basically took all the categories from those 4 previous slides and turned them into one worksheet so I could use the spark lines to show a trend. So this is basically all the categories: revenue, net income, diluted EPS, net profit margin, operating income, net change in cash, cash on hand. I don't think they reported this data, and that's why it's not listed on any of those sheets. So but I left it here because it was one of the categories. And then cost of revenue. So like I said, I'm not sure if this is good, lower, or higher. I don't really know about this one. And I also don't know if the net change in cash, is it better to be higher or lower? Not really sure. So I'm not sure about these 2 right here. Actually, all 3. Well, cash on hand, we don't know how much cash they had on hand. But I'm not sure if these are good to be high, low, whatever. But regardless, if we look at a trend, this basically shows that September 2021, they had more income than they did in June 2022, right? It's going down. Here, net income up and then down. Diluted EPS up and then down. Net profit margin up and then down. Operating income up and then down. So to me, these are the most critical ones right here. And they're showing a trend down, which means that DoorDash is becoming less of a healthy organization, that it is trending down, trending lower. Maybe they're spending more money and not having as much come in. I know that DoorDash is now adding more and more retailers, more and more different types of businesses. You can even deliver from Facebook Marketplace purchases. I mean, it's crazy. The amount of things that the Dashers are now being offered as deliveries. Our pay is going down. The base pay is going down. So they're paying Dashers less and less. Yet at the same time, they're charging customers more and more, businesses more and more, and they're still on a trend down. So to me, that's not a good sign. I don't know how low it can go before there is no more DoorDash. I don't know how low it will go before they change the way they do business to try to get more net income. Maybe they're doing this on purpose. I don't really know. If you're a financial expert and you have any insight into this, I would love to hear what you have to say. But as a Dasher, this is a little bit troubling to me. And I think it just goes to show that maybe the gig economy as a whole is not as strong as it once was. Now, luckily, I do this as a side gig, and I don't rely on it for my living expenses and my livelihood, but I know so many people do. So hopefully for their sake, things turn around and pick back up, and DoorDash makes some smart decisions so that they have a future and that the Dashers can continue to work and make money and support their families. Anyways, I found this very interesting, and I hope you did too. Thanks again for watching, and stay healthy, stay safe, make a lot of money. See you next time.